Alibaba just posted its quarter for June 2024, and overall, I thought it was a bad quarter, but I see the big picture of what's happening with Alibaba, and the thesis is still intact. So I'm still very hopeful. We're gonna get into it right now. I'm gonna talk about the most important things from this quarter. Even though the profitability of Alibaba was down significantly this quarter, there's still hope for Alibaba. So let's get into it. I'm gonna talk about the earnings call, the most important things. So let's get into the video. First, when we talk about Alibaba, we have to discuss the free cash flow and how cheap the stock is. It's trading around a 12% free cash flow yield, more like 16% free cash flow yield if you minus the cash off the market cap, around a $200 billion market cap, and Alibaba earns around $20 to $25 billion of free cash flow. And that yield is amazing when you compare it to any other company. If you compare that to Amazon, Apple, Google, Facebook, whatever company you want to compare it to, it's amazing. And they're using that free cash flow to actually give you a dividends and buying back shares. You have to understand the amazing opportunity at our hands first when you think about this quarter overall. So let's get into the earnings because they did miss. On the revenue side, they missed by $1.1 billion. The revenue year over year was up 4%, which isn't amazing. I actually expected a lot more from Alibaba this quarter, and I was hopeful, but man, the Chinese economy is still kind of in that mid-tier. It's not doing that good. It's not skyrocketing. It's just kind of being very lackadaisical. It's just in that midstream right now. So we have management talking about what they can see into the future when it comes to the next quarters. And that's why I'm very bullish, because of what management said. But let's get into the overall review of this quarter. So here's the business and financial highlights for this quarter. Taobao and Tmall Group is winning the mindshare of consumers. This past quarter, we achieved high single-digit online GMV growth and double-digit order growth. And this is super, super key because it's showing that consumers are still growing to the company and actually buying a lot of products. Alibaba's cloud overall revenue grew at 6%, driven by double-digit public cloud growth and increasing adoption of AI-related products. This is what we're seeing in Alibaba, the company. They're developing their cloud very significantly, and this is where they're investing all their money. Because we know as Baba shareholders that this is where the growth is gonna really come from long term. As we see Amazon and AWS, that's what led Amazon to huge profitability and just like earnings growth and revenue growth. So this is the super key aspect of Alibaba. And cloud in China is still in the infancy stages, so this is super key. Alibaba's international digital commerce group continues to achieve robust revenue growth, driven by rapid order growth in cross-border businesses. So we can kind of see what's happening with Alibaba as the main business. People are still going, they're still buying products, they're still using Alibaba. Net cash position of 55 billion, and this is so huge. And this is kind of like the financial backing that we need to secure us to be like, damn, we can wait a long time. Alibaba is not in any financial crunch, so you can kind of hold these shares for a long time, knowing that you have this huge financial backing. Now we're getting to cash return to shareholders, the share repurchase structure. So they had a net decrease of 445 million ordinary shares compared to March 31st, 2024, or a 2.3 net reduction in outstanding shares after accounting for shares issued under ESOP. So they still have $26 billion to buy back going through March 2027. So they still have a lot of money to buy back shares. Overall, this year, I think they're gonna have like around a 9% net reduction in shares outstanding, which is actually phenomenal. If they can keep this up, can you imagine what happened in 5 years, 10 years? They're basically gonna be able to buy back all of their shares if the company stays at this price, which is fantastic. This is why I can hold my shares so comfortably. You're buying back the shares, you don't have to do it yourself. This is automatically gonna raise the price eventually if they keep buying back their shares at this price, because soon there's gonna be no more shares to buy. They're using a lot of capex on AI, on the cloud. So this is kind of where it gets sour. So they had a net reduction year over year, percent-wise, of 15% of the income from operations. Net income decreased 27%. So this is kind of where the issues are coming from. And again, they're using a lot of money. They're not monetizing heavy yet. They're still kind of competing with the PDDs to get market shares. They're subsidizing a lot of stuff. So this is where people are saying, damn, Alibaba still hasn't hit their stride, and it's been like 2 to 3 plus years. Remember, there's new management introducing all of these new products, so we still got to give Alibaba time. We can see free cash flow decreasing. It's at 2 billion now, so the same thing is happening. They are saying they're spending a lot on CapEx, especially when it comes to the cloud and their AI products that they're introducing. So a lot of people are investing in Alibaba because they're seeing the future of Alibaba Cloud grow and the AI products growing very fast. So this is super key for Alibaba's thesis. During this quarter, overall revenue, excluding Alibaba consolidated subsidiaries, grew over 6% year over year, driven by double-digit public cloud growth and increasing adoption of AI-related products. AI-related product revenue continued to grow at triple digits year over year. We'll continue to invest in customers and technology, particularly in AI infrastructure, to increase cloud adoption for AI and maintain our market leadership. Alibaba Cloud has a very dominant market leadership in this product segment. So this is kind of where we're seeing the future of Alibaba, and people are hoping that they can make this like AWS, like skyrocket of revenue and profitability. So this is why a lot of people have very high hopes for Alibaba Cloud. Cloud Intelligence Group adjusted EBITDA increased by 155%. So this is what we're seeing. The number of paying users in Alibaba's cloud AI platform increased by over 200% quarter over quarter. So you can kind of see why people are super bullish on Alibaba, because this is an area where you're not getting a lot of competition from PDD because they don't really get into cloud. Tencent is not a very heavy cloud and AI competition for Alibaba. Huawei is like the only kind of cloud competitor to Alibaba. So we understand that. We know like the marketing cloud for China is going to grow like double digits. So if Alibaba can take advantage of that, and we know AI is booming, we see what Nvidia is doing, this is just a huge growth opportunity for Alibaba. This is going to be a high margin business on top of what they're already doing with Taobao and Tmall, and they still have a market leadership in the China commerce business. Here's a final nail in the coffin and why people are so bullish on Alibaba still, and we got to hold management accountable for what they're saying in the next upcoming 2 to 3 quarters. We have to kind of see this, because if we don't see this, then we can kind of start worrying about what's happening with Alibaba. We're advancing a monetization step by step, including the launch of this new product tool. Through algorithm upgrades, we aim to enhance the efficiency of merchants' monetization while also improving the efficiency of traffic utilization and conversion to user traffic to purchase on our platform. We expect CMR growth to gradually align with the GMV growth over the coming quarters. So if we can get that CMR growth, this is basically the advertisement revenue, get into high single digits with all the product that they're selling, oh my God, we can see 10, 11, 12% growth in this area. High income from operations now. This is where it's at for Alibaba, and we got to hold them accountable. They're saying that they're going to pick up the monetization for Alibaba, and that's going to be more efficient. You have to believe management if we truly want to hold Alibaba, and I don't feel like they're kind of deceiving us in any way. Beyond e-commerce and cloud, we implemented strategic realignments across our key internet technology businesses through evaluation of the product capabilities and market competitiveness while maintaining product competitiveness. Most of these businesses will now place a higher priority on monetization. This quarter, we already seen these businesses significantly improve our profitability, and we expect this trend to continue in the coming quarters. And this is what we need, the coming quarters. So we really have to see next quarter, maybe until 2025, like the second quarter of 2025. We need to see this. And we don't, then we can kind of put the nail in the coffin and say, we're in trouble with Alibaba. It's just going to be a buyback story. So there you go. Management is literally saying to us that, wait a second, we're going to start monetizing and be more efficient with what we're doing. And we're just building up the brand. We're just making sure our market share is stabilized before we ask for monetization from all the people using our products, our website, whatever it is. So there's high hopes for Alibaba going into 2025. We need to hold management accountable. We got to see improvement overall in the next coming quarters, so we can kind of hold the management to that. Remember, we still have a cheap company in Alibaba selling for around a 12 to 16 free cash flow yield right now, which is actually amazing. They're buying back what 6 to 9% of their shares outstanding in like 5 years. That's gonna already be like 40 to 50% net reduction in shares outstanding. That's already a double in the share price. If they do that, 2% dividend yield. What else do you want from Alibaba at this point? So we have to really focus on what Alibaba is doing, because we still have China's economy in a slump, and if that picks up again, we can really see Alibaba take off. So there's still hope even after a bad quarter. We still see what management is saying, and if we believe what management says, the thesis is still intact. So guys, what do you think about this quarter for Alibaba? Guys, leave your comments below and like this video. Peace.